Welcome to Warren & Stewart's Autumn Statement Update. We've just listened to George and his Autumn Statement, and I'm here with Francis to discuss some of the interesting proposals that have come out of the Autumn Statement and just run through it with you to give an instant feel of what's going on. Please take this as just a brief update so you can get our instant reaction, and if you want to call us or make contacts and discuss anything further, please don't rely on just this video, make contact with us. The first thing is, George seems very happy with himself that the growth of the economy is going in the right direction. This appears to be good news from the perspective of the deficit deduction, but I suspect the opposition will disagree with some of the figures, and no doubt we'll hear all about it in the papers tomorrow. But the first thing that we have identified as the major change in the budget is to do with stamp duty. And this does feel like this is a statement that is fundamentally changing something that's been around for a very long time, stamp duty in relation to residential property. So Francis, tell us what you've learned of the stamp duty so far.
Yes, well, as I think most people will be aware of, we currently have a stepped system where a £1 increase in the purchase price at certain points, sort of 250,000, 500,000, 1 million and 2 million, leads to a step change in the rate of stamp duty that's paid. So big increases for a fractional increase in purchase price. There's the new system which comes into effect immediately. Is that we now have a graduated, a sort of smooth system of stamp duty charges, with the effect that most people, as George Osborne said, 98% of home transactions in the UK will pay less stamp duty. Just to give a few figures from the table in the announcements, if, for example, you were to buy a home for £275,000. Today, you would pay £4,500 less stamp duty than you would have done a few months ago. So it's a really substantial change for most people.
And what's the magical number that everyone needs to be aware of?
The magical number is £937,500. So for any property purchase of less than that level, you will pay less stamp duty now than was previously the case. For any purchase above that 937,000 level, you will pay more. And interestingly, the table in the chart sort of runs up into the sort of £3, £4, £5 million transaction values to give examples as to how much would be paid. So on a £5 million property, £163,750 more stamp duty will be due now than was under the previous step system.
So this is going to have a real effect on the high-end London property market, where everybody's been talking about a real turn down in business. This is going to be some more water on the fire, I guess, in terms of the London property market.
Yes, it will be, although generously the Chancellor has allowed a transitional period, so that if you are in the process of going through a transaction at the moment, say you've already exchanged but not yet completed, you can choose whether to be charged under the old regime or the new regime. So obviously if you're in a higher value transaction, you will opt to go under the old regime where you will pay less. So that's not going to derail any transactions that are currently in process. So I suppose that's good news if you're currently in the process of buying a new home.
As an accountant and involved in lots of structuring, a bit of interesting news is the change in the way intangibles work on incorporation. Those of you who are aware of this subject, and those of you who know nothing about it, you probably need to look away now. But what happens when an unincorporated business incorporates, it's been in the past been able to take advantage of the entrepreneur's relief available to it, and also very generous deductions in terms of intangible amortization within the company. The short answer to it is that from the 3rd of December, or today, you're no longer to take advantage of the entrepreneur's relief or the intangible deduction on incorporations. So it appears that historically nothing's going to change. It's looking forward that actually this is no longer a planning tool that people have been using, to be quite honest, for the last 10 years in one form or another. It doesn't mean that you don't have to think about your structure, because it is not just the position of whether entrepreneurs relief or the intangible deduction is available. Every business structure is going to have different needs, and different things can be appropriate. It's not, structuring is not solely about making sure you get the right tax deductions. So please do keep talking to us on these subjects. But I think that's going to be a big change for many practices. The other change I think we need to talk about is inheritance tax changes.
Yes, so the Chancellor reiterated the announcements that were already made in his speech at the party conference a few months ago, about removing the death tax on pension funds on death. So currently there is a 55% tax charge on any unused pot of pension savings when the beneficiary passes away, but now that unused pot can be transferred down to children or grandchildren, or actually anybody else for that matter, with no tax charge. So that's it's a very sort of subtle but actually very important change in terms of people planning whether or not to exhaust, deliberately try and exhaust their pension funds during their life, or maybe try and deliberately leave something left over so it can be passed down. It's quite a fundamental change, I think, and that comes into effect next April.
I think it sounds as if it's going to be helping those people that are considering taking everything out of their pension pots pretty quickly. I think it's going to be a little bit of an incentive to keep money into pension schemes.
Yes, absolutely. Yes,
and also the ISAs?
Yes, so at the moment we have a slightly strange situation where, while there's no inheritance tax on transfers between spouses on death, if say a husband dies and passes his ISA to his wife, then upon that transfer it ceases to be an ISA, so it ceases to have those tax protections. So the income from the investments and the gains on those investments would no longer be tax free. And that anomaly has been removed. So now one spouse's ISA continues to be an ISA in the hands of the surviving spouse. So I think that's quite a generous relief, and again that has an impact on how people will plan. People who are in retirement living off the income from their pensions or their ISAs will plan how to use those funds. So
absolutely, and I think some people may need to look at their wills if they've got substantial levels of ISAs in place to make sure that they're directed to the spouse as opposed to the general residual of the estate.
Absolutely, yes.
Yeah.
Yes. Yeah.
And I think the next topic is remittance basis charge. Never a popular subject for our non-domiciled clients. Bad news again, they're not changing the £30,000, but they're lifting the £50,000 once you've been here for more than 12 years up to £60,000, and introducing a new level after 17 years of being resident of £90,000 to stay within the remittance basis charge. Obviously trying to gather more tax from the wealthy non-domiciles, which is possibly not going to lose them too many votes. So that's the remittance basis charge. Francis, I guess it's really a case of there's lots of other things going on. We should mention. Yes,
there are a lot of more sort of targeted changes. So Chancellor announced that banks who made large losses during the recession will be restricted on how they can use those losses to claim deductions for corporation tax. So that looks like quite a politically motivated sort of attack, as it were, on the banking sector. Other anti-avoidance measures announced to do with umbrella companies, partnerships and certain arrangements that kind of private equity and hedge fund structures use to turn income into capital gains. So some quite targeted changes there.
And I think finally, there's good news in terms of personal allowances, in the sense that the government's targeting until 2020 that the personal allowance will increase to £12,500 and the higher rate limit to £50,000. But the question is, will they be in power and get to this point in 2020? So it's really a case of we don't know, and I suspect a lot of people will be very interested in the tax world, what happens come the general election in May. So I suspect not just people in the property markets, but in the tax world are interested in what happens come this general election. My name's Damien Talbot.
I'm Francis Kershaw.
And please do make contacts with us if you want to discuss anything that we've mentioned in this short video clip. And yes, Autumn Statement 2014 shall be remembered for its stamp duty changes, I suspect. Okay, thank you very much. Bye-bye.
Thanks, bye.